What is happening, crypto fam? Get ready, because the market is absolutely exploding with news and you need to know what's going on. We're talking about a seismic shift in how major players are approaching digital assets, and trust me, you do not want to miss these updates. The pace is relentless, the stakes are higher than ever, and if you're not plugged in, you're missing out on the future. Today, we've got some absolutely mind-blowing developments that are reshaping the entire landscape. Are you ready to dive deep? Let's get into it. First up, the world of institutional investment is undergoing a massive transformation, with major players making bold moves that are redefining the game. We're seeing a clear trend towards a new paradigm, and the implications are huge for everyone involved. Then, we're breaking down exactly how much Bitcoin public companies are now holding, and the numbers are staggering. This isn't just a small investment, it's a flood of capital that's changing the balance of power. We'll show you who's leading the charge and what it means for the price action. But hold on, because we're also looking ahead to next year and asking the critical question. Will the altcoin season of 2025 have the same explosive energy as 2021? We've got expert analysis that suggests things might be different, and you need to hear why. And finally, we're diving into the surprising outperformance of Ethereum against Bitcoin. Is this a sign of a new era, and what does it mean for the dominance of altcoins? We've got the data that could change how you see the market. Don't go anywhere. Hit that subscribe button, ring the notification bell, and smash that like button so you don't miss a single second of these critical updates. Let's go. A new paradigm for investors. Institutional investment is undergoing a massive transformation, signaling a significant shift in how major players engage with digital assets. This evolving landscape suggests a new paradigm is emerging, with profound implications for the future of finance. The institutional adoption of Bitcoin is accelerating at an unprecedented pace, fundamentally altering the perception and utility of digital assets within traditional financial frameworks. This shift isn't merely about diversification. It represents a strategic reevaluation of Bitcoin as a legitimate store of value and a potential hedge against traditional economic uncertainties. For decades, institutional investors have navigated markets with established asset classes like stocks, bonds, and commodities. However, the digital revolution, spearheaded by cryptocurrencies, has introduced a new frontier, challenging conventional wisdom and forcing a re-examination of portfolio construction. The increasing integration of Bitcoin into institutional strategies is a testament to its growing maturity and acceptance, moving it from the periphery of speculative interest to the core of strategic asset allocation. This transition is fueled by a confluence of factors, including regulatory clarity, the development of robust infrastructure, and a growing demand for uncorrelated assets in an increasingly interconnected global economy. Public companies are now collectively holding a staggering amount of Bitcoin, valued at approximately $108 billion. This significant accumulation reflects a growing trend where corporations are increasingly treating Bitcoin as a treasury reserve asset, akin to gold or other tangible assets. The past week alone saw 8 public companies bolster their Bitcoin holdings, underscoring the rapid acceleration of this institutional adoption. Data from Bitcoin treasuries reveals that the top 100 corporate and institutional holders now collectively own nearly 1 million Bitcoins. MicroStrategy continues to lead this charge, with an immense holding of over 632,000 BTC, followed by Marathon Digital and XXI. Other prominent companies like Tesla, Coinbase, and Block Inc. are also actively participating in this trend. Notably, Metaplanet Inc. recently increased its Bitcoin reserves to 20,000 BTC, highlighting a growing interest from Asian corporations. Analysts suggest that this surge in corporate Bitcoin holdings is intrinsically linked to the steady inflows into Bitcoin exchange-traded funds, ETFs, and the prevailing global macroeconomic conditions, which are pushing investors towards scarce assets. As more companies recognize Bitcoin's potential as a digital gold, its role as a treasury reserve asset is likely to expand. This trend is further amplified by Bitcoin's recent price performance, which has seen it regain momentum and trade at elevated levels, often outpacing the broader crypto market. The narrative surrounding Bitcoin has evolved from a niche digital currency to a significant financial instrument, attracting sophisticated investors and corporations alike. The race among firms to secure strategic Bitcoin allocations appears far from over, indicating a sustained period of institutional interest and accumulation. This institutional embrace is not just a financial decision. It's a validation of Bitcoin's long-term viability and its potential to disrupt traditional financial systems. But what does this massive influx of institutional money mean for the average investor? And how will this impact the much-anticipated altcoin season next year? Corporate Bitcoin stash hits $108 billion. Public companies have significantly expanded their Bitcoin holdings, collectively amassing over $108 billion worth of the cryptocurrency, signaling a major shift in corporate treasury strategies. The institutionalization of Bitcoin continues its relentless march forward, with public companies now collectively holding an astounding $108 billion in Bitcoin. This figure, derived from data tracking the top corporate and institutional holders, represents a seismic shift in how businesses view and utilize digital assets. In the span of just the last week, a remarkable 8 public companies have increased their Bitcoin reserves, a clear indicator that the pace of institutional adoption is not just steady, but accelerating rapidly. These companies are increasingly treating Bitcoin not as a speculative bet, but as a strategic treasury reserve asset, a move that echoes historical precedents of companies holding gold or other tangible assets to safeguard their financial stability and growth. According to the latest data from Bitcoin treasuries, the top 100 corporate and institutional entities now collectively own an impressive 990,695 BTC. To put this into perspective, this is nearly 1 million Bitcoins held by a select group of forward-thinking companies. MicroStrategy remains the undisputed titan in this space, boasting an unparalleled holding of over 632,000 BTC. Following closely behind are Marathon Digital with 50,639 BTC and XXI with 43,514 BTC. The list of major corporate Bitcoin holders also includes significant players like Tesla, Coinbase, CleanSpark, Galaxy Digital, and Block Inc., all of whom have strategically allocated substantial portions of their balance sheets to Bitcoin. A particularly noteworthy development is MetaPlanet Inc.'s recent expansion of its position to 20,000 BTC, highlighting a burgeoning interest from corporate entities in Asia, further broadening the geographical reach of this trend. This surge in corporate Bitcoin accumulation is occurring against a backdrop of favorable market conditions and evolving investor sentiment. Analysts point to the consistent inflows into Bitcoin exchange-traded funds, ETFs, as a primary driver, providing a steady stream of capital that validates Bitcoin's role in diversified portfolios. Furthermore, global macroeconomic factors, characterized by persistent inflation concerns and geopolitical uncertainties, continue to push investors, including corporations, towards assets perceived as scarce and resilient, with Bitcoin increasingly fitting that description. Bitcoin's recent price action, which saw it regain momentum and trade at approximately $110,245, up 2.2% in the past 24 hours and outperforming the broader crypto market, further solidifies its position as a leading digital asset. The narrative has clearly shifted. Bitcoin is no longer just a digital currency for early adopters, but a recognized financial instrument with the potential for significant long-term value appreciation. This institutional embrace is not only validating Bitcoin's technological innovation, but also its potential to reshape the future of finance by offering a decentralized, scarce, and globally accessible asset. This widespread corporate adoption is undeniably bullish, but what does it mean for the much-anticipated altcoin season? Could the dynamics of 2025's altcoin market look vastly different from the explosive rallies of 2021? 2025 altcoin season, a muted echo of 2021. Analysts predict the 2025 altcoin season may not replicate the explosive growth of 2021 due to significant structural and macroeconomic shifts, potentially altering the altcoin market's trajectory. The cryptocurrency market is abuzz with discussions about the potential for an altcoin season in 2025, but a growing consensus among analysts suggests it might not mirror the frenzied, parabolic rallies seen in 2021. This cautious outlook is rooted in fundamental structural differences within the market and a contrasting macroeconomic environment. Historically, an altcoin season, characterized by widespread altcoin outperformance against Bitcoin, typically ignites when Bitcoin's market dominance, BTCD, falls below 55%. While BTCD has recently dipped to around 59%, indicating some capital rotation, it has not yet breached this critical threshold. This suggests that while there's a nascent shift, capital is still largely concentrated in larger cap assets, particularly Bitcoin and Ethereum, rather than broadly distributing across the altcoin spectrum. Several key factors are contributing to this divergence from previous cycles. The most significant is the unprecedented level of institutional involvement, particularly through the introduction of Bitcoin and Ethereum spot ETFs. Major asset managers like BlackRock and Fidelity have facilitated substantial inflows of institutional capital, which has, in turn, increased the correlation between Bitcoin, Ethereum, and traditional risk assets. This institutionalization means that the price movements of major cryptocurrencies are becoming less idiosyncratic and more sensitive to broader market trends, dampening the potential for explosive, isolated rallies in smaller altcoins. Furthermore, the macroeconomic landscape differs starkly from the 2021 bull run. The 2021 cycle benefited from a global liquidity surge and accommodative monetary policies. In contrast, the current environment is marked by higher interest rates maintained by central banks like the Federal Reserve, which acts as a brake on speculative market activity and limits the overall upward momentum. The Altcoin Season Index, a crucial metric that tracks the percentage of top 100 altcoins outperforming Bitcoin over a 90-day period, currently sits at approximately 44. This is a significant distance from the 75-plus readings that historically signal a full-fledged altcoin season, and a far cry from the over 90 levels seen consistently during the 2021 bull market. Although there has been a gradual increase in altcoin market capitalization since July, growing by an estimated 50%, this growth is largely driven by a few leading altcoins, with Ethereum showing strong relative performance. However, the breadth of the rally remains limited, indicating that mid and small cap altcoins are yet to experience substantial capital inflows. Looking ahead, analysts foresee a potential three-phase evolution for the altcoin market in the latter half of 2025. The initial phase might see opportunities arising from narrative-driven sectors like artificial intelligence, AI, real-world assets, RWA, and blockchain gaming. The medium-term outlook hinges on a further decline in BTCD and a more favorable macroeconomic climate, potentially triggered by Federal Reserve rate cuts, which could officially kickstart an altcoin season. However, the long-term structural outlook suggests that the dominance of institutional capital could lead to prolonged rallies in major cryptocurrencies, potentially at the expense of smaller altcoins, creating a different market dynamic than in previous cycles. Some analysts, like Ray Yosef, even caution that the peak of the current altcoin cycle might already be behind us, advising caution against highly speculative tokens that lack tangible utility, given the potential for sharp corrections. While the altcoin market might face different dynamics, one major player is already showing impressive strength. Could Ethereum's recent outperformance signal a new era of altcoin dominance? Ethereum outshines Bitcoin, a new era dawns. Ethereum is demonstrating a notable outperformance against Bitcoin, sparking discussions about a potential shift towards broader altcoin dominance and a new market paradigm. In a significant development that could signal a changing of the guard in the digital asset space, Ethereum has begun to exhibit a strong outperformance relative to Bitcoin. This trend, observed amidst a market that has seen Bitcoin regain momentum, is drawing considerable attention from analysts and investors alike. Traditionally, Bitcoin has been the primary driver of the cryptocurrency market, with its price movements often dictating the overall direction. However, Ethereum's recent performance suggests a potential decoupling, where its own fundamental developments and market dynamics are starting to exert a more independent influence. This is particularly noteworthy as the market grapples with the increasing institutionalization of digital assets, with Bitcoin ETFs attracting significant capital. While Bitcoin remains the benchmark, Ethereum's growing strength could indicate a maturing market where other assets can carve out their own significant growth trajectories. The context for Ethereum's outperformance is multifaceted. Several factors are contributing to its upward momentum. Firstly, the ongoing upgrades to the Ethereum network, particularly the transition to a more efficient proof-of-stake consensus mechanism, have enhanced its scalability and reduced transaction costs. These improvements make Ethereum a more attractive platform for decentralized applications, dApps, DeFi protocols, and NFTs, driving increased network activity and demand for its native token, ETH. Secondly, the anticipation surrounding future upgrades, such as further enhancements to its sharding capabilities, continues to fuel investor optimism. Unlike Bitcoin, which is primarily viewed as a store of value, Ethereum is increasingly seen as a foundational layer for a decentralized internet, offering a wider range of utility and potential for innovation. This broader utility, coupled with its established developer ecosystem and substantial network effect, positions Ethereum favorably for long-term growth. Furthermore, the market's reaction to Ethereum's performance is a key indicator of evolving investor sentiment. While data from CryptoQuant suggests that Ethereum has experienced a price correction from its recent all-time high, the underlying market interest remains robust. This resilience, even in the face of broader market fluctuations, highlights the strength of Ethereum's fundamental value proposition. Analysts are closely monitoring the relationship between ETH and BTC, often referred to as the ETH-BTC trading pair, as a barometer for altcoin market health. A sustained period of ETH outperformance against BTC is often a precursor to a broader altcoin season, where many smaller cryptocurrencies begin to rally significantly. This current trend could be an early signal of such a shift, suggesting that capital may begin to rotate more broadly from Bitcoin into other digital assets. The implications of Ethereum's outperformance are significant for the entire cryptocurrency ecosystem. If this trend continues, it could usher in a new era where altcoins, led by Ethereum, play a more prominent role in market capitalization and investor attention. This would represent a maturation of the market, moving beyond a singular focus on Bitcoin towards a more diversified digital asset landscape. It also presents new opportunities for investors looking to capitalize on the growth of decentralized technologies and applications. The ongoing developments within the Ethereum ecosystem, combined with a potentially shifting macroeconomic environment, could create a powerful catalyst for sustained growth and increased altcoin dominance in the coming months and years. These are some of the most significant market movements we're tracking right now. But before you go, let's do a quick recap of today's top stories. All right, let's do a lightning round recap. Public companies are stacking over $108 billion in Bitcoin, showing massive institutional adoption. Analysts are predicting a different vibe for the 2025 altcoin season compared to 2021's explosive growth. And Ethereum is outperforming Bitcoin, potentially signaling a new era for altcoin dominance. If you found this update valuable, do us a huge favor. Smash that like button, subscribe to the channel for more critical market insights, and ring that notification bell so you never miss an update. Also, make sure to follow us on all our social media channels for real-time news and analysis. Thanks for watching, and we'll see you in the next one.